In fact, the XAUUSD has been another interesting trading setup for us this week, as we've scooped in significant amount of profit on this commodity. Now, before we kickstart the expectations for today, let's run through how the how things went by for us since Tuesday's trading session. I don't want to go to the first day of the week because that is on another chart entirely. And in fact, I want us to use this one as this is what we have been using to guide our trading activities for the last 2 to 3 days now remember, on Tuesday we had a buy position when price action broke out of the 1963, and since that moment we have been adding more buy position to our positions. And for the fact that price remained above our key level, remember our key level for the week on the XAUUSD is the 1960 area, which of course, when price remains above our key level, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, for the fact that price remained above our key level, coupled with these all structures we identified around the 1963, we captured that bullish move and we went on to add more positions, had the breakout of levels such as the 1968. We had the 1970. Okay, I think here. Then we also added more at the 1973 and of course the 1975. So that is how we rode that bullish momentum to the upside. And in fact, in addition to those levels, we also had an ascending trend line, which we agreed that we are going to be using to guide our trading activity for the later part of the week. And of course, you know that as long as price remains above that key level, we want to be looking out for buying opportunity. Now, during our live session yesterday, we were around here. This was where we were exactly. And I told us all here that all buy positions must be secured, as our center of focus for yesterday's trading session remains between the 1980 and the 1975. And I also emphasize the peculiarity of this 1975 area, which I told you all yesterday shares a beautiful confluence with that ascending trend line. So I said here yesterday that coupled with the continued selling pressure, we noticed around the 1980 that there is a likelihood that sellers could come in when price action breaks down both the ascending trend line and of course the 1975. Then I said that for those who are already profitable on the XAUUSD, you can afford to have your sell stop order below the 1975 to test waters around that area, risking some of the profit we had made so far this week to leverage on that position. And look at what happened here. I told us all to use to maximize the profit by having more sell stop orders, had both the 1973 below the 1971.50. In fact, that was the three positions I was able to capture yesterday. And in fact, we had more other levels like the 1970, 1968, and the 1965, which unfortunately I was unable to include into my orders as price action dropped significantly to the downside. So it has been quite an interesting 24 hours for everyone in this community, and for those who took advantage of that move, well done and kudos to you for being on standby to catch that move. Now, with that being said right here, no one to be in a sell position right now, of course, because if you had moved your stop losses, you definitely must have been taken out at this current market structure. Now, before we go into the details here, I would like us to scale up into the higher time frame. Let's have an holistic view of what is really going on in the market, and let's see how we can, if we can find correlations between the higher time frame and the 1 hour time frame that could give us an idea or insight into how to position ourselves ahead of the New York session today. Now, going into the 4 hours time frame, I want to refresh our memories as regards to what we saw at the beginning of the week on this chart. Now, if you remember vividly at the beginning of the week, this is what we were able to come up with. We saw this, we took into consideration the nature of price action since the beginning of this month we are in, that is the month of July. And we were able to come up with the fact that price action has been very, very bullish throughout this month. And to further emphasize that bullish momentum, we had a couple of trend lines, which we of course used to guide our trading activity at the beginning of the week. And one of the things we saw on this chart was that as soon as price action got into both of these ascending trend lines at the beginning of the week, we begin to see buy pressure around that area. And coupled with the fact that we had our key level at the 1960, which of course we used to guide our buying opportunity, we joined that bullish momentum to the upside. As you will see, price cut into the 1980 zone and we saw this bearish move to the downside. Now, if you look at the structure now, considering this impulsive bearish move that sliced through both of those ascending trend line, from a technical standpoint, whenever price action breaks out of a very key important structure such as the ascending trend line on this chart, we expect that some point in time price might likely come back to retest any of the trend lines to incite another bearish momentum to the downside. Now we want to consider this this emergence of buy pressure as soon as price action got into the 1940. This might likely be a retracement move that has just started, which of course price gets into the ascending trend line might likely incite a sell-off. Now the question here is, do we want to be part of the counter trend opportunity? Well, if you are not a scalper or someone who feels comfortable taking counter trend opportunities, you might stay clear of this, but it is quite simple to take advantage of an opportunity here. All you just need to do is when price action moves well in your favor, you want to be moving your stop loss to secure your position. As with the situation we have here, sellers could still come in anytime. So in order to be able to capitalize on a trading opportunity today, have been able to identify a simple setup using trend lines and levels to identify how to manage our position for today. So going back into the 1 hour time frame, this is what I was able to come up with this morning. Now the first thing I observed here is that as soon as price action got into the 1944 level, we begin to see buy pressure resumed, and this buy pressure continued in such a way that it continued to find higher lows. And when we start noticing higher lows on the chart, it's a clear sign that buyers are gradually gaining momentum behind the scenes. So with the situation observed here, I had a couple of trend lines which of course we are going to be using to guide our trading activity for today. So you want to be marking out these trend lines on your chart. Very, very important, as depending on how price action reacts to this trend line will determine if price will be continuing to the upside or is going to be nosediving to the downside. Now, in addition to the 1944 is this 1950, which showed us that during the later part of the New York session stroke the early hours of today, price action was initially confined within that zone before we saw the breakout of the structure during the early hours of today. Now, with the breakout of that structure, for me, this could be a sign that we are likely going to be seeing an uptrend situation here for today, as price has come back to retest the 1950, followed by continued buy pressure just right above that ascending trend line. So if you had bought at the 1950 area, well done to you for capturing that move. So you definitely want to be moving your stop loss to your entry point, secure those positions so that if price action goes against us, we are going to be taking out at the worst case scenario break even on this one. Now, with the situation we have here, if you had missed out on that one, well, we have more opportunities at the breakout retest of the 1,955 level, which happens to be the highest point price action had been in the last 10 hours or so now. So to join this bullish momentum here, I want to see price action continue to climb, find higher highs such as this, and then a further breakout of the 1,960 will welcome more buy positions in this market. So let's see how we can capitalize on this bullish move as price action continues to find higher lows and higher highs in this market. So this is looking very bullish in the sense that this is a retracement phase. And I told you earlier that we don't know how far this retracement phase is going to go. So we shall be using levels such as the 1,960, 1,965, 1,970 as a yardstick to know if there is going to be the end of the retracement phase or not, where we shall be looking out for patterns around that area to determine what our next line of action will be. Now, in as much as we're looking out for buying potentials in this market, as we are looking forward to more breakouts of the 1,955, we cannot ignore the potentials the sellers also have in this market. And if we consider the strong bearish impulsive move that started yesterday, slicing through both the ascending trend lines we identified on the 4 hours time frame, of course, we should not ignore the potentials the sellers could still have at this juncture. Now, with that idea in mind, I'm of the opinion that if we are going to be selling, then I want to see price action slice through this ascending trend line to give me a sign that this trend line may no longer have the capacity to continue to reject the sellers. And if a breakdown happens, then we want to be getting ready to be part of a bearish move. So to give a visual representation of what I'm talking about here, a breakdown such as this, breakdown of the trend line, which of course also shares a confluence with the 1,950 level, a strong psychological area there considering the round figure of that price, might likely incite a bearish move. Now, once we see the breakdown happens, remember we are not getting too excited. We want to scale down into our lower time frames such as the 5, 10 or 15 minutes time frame to look out for confirmations that buyers are finding it difficult to climb back above the ascending trend line. And this of course will reflect on the chart as a retest of either the trend line or the 1,950 to incite a bearish move to the downside. And if price action continues, then a further breakdown of the 1,944 level should be welcoming more opportunities to maximize the potential of that bearish move. But with the way things are looking right now, I'm of the opinion that price action is going to be going to the upside. Hence, I'm anticipating a further breakout of the 1,955. But if the opposite happens and continued selling pressure persists around the 1,955, leading to the breakdown of the 1,950, then we will not have any other choice than to start considering selling. So these are my views here on the XAUUSD today. Very simple setup we have on the 1 hour time frame. Our center of focus is basically between that 1,955 area and of course the 1,950, where depending on how price action reacts to the structure will be determining how we are going to be managing our positions on this asset. Now remember that we have a high impact event coming up later today. I think in about 30 minutes or so from now we should be having that event. That is okay, I think about an hour or so we are going to be having that event now. So we are likely seeing the reflection of the anticipation of the event on the chart right now, as price action is still finding its way through this current market structure. So let's see what happens. Mark out these levels on your chart and let's wait for our structures and signals to mature before we want to be jumping into any position at this point in time. So these are my views here. If you have any questions whatsoever, feel free to let me know in the comment section.